Hello traders and welcome to another weekly market forecast video. So hopefully everybody is having a great day. We also have a quick announcement to make that we have added a new feature for our members only. This will include a private Telegram group for the members in which we will be sharing with them real-time announcements and news related to our projects and generally our recommendations in general. So that's another feature that will boost significantly also our efficiency with communicating with our members into many things of the market. So next we start as usual with the dollar index. We have seen the last move to the downside that we expected during the last week, and now the market will be getting ready for a consolidation stage. So this will take some time. We'll go up and down, eventually sideways to higher rotation. And this will be the next bias for the dollar index for the shorter term heading into the next week onwards. So generally, this move from the 13th of January, we can see it ending, and this will be a slow consolidation. It's not anything significant, but the major moves already happened, so traders already they are taking profits from the beginning of the year. So this will be a consolidation stage for the dollar from now onwards. And that's the dollar yen. We have already explained from these highs about this move to the downside. We explained that this bounce is not going to be a bounce that will continue. We expected another move to the downside. This is exactly again what we had, and we're entering the month of April, and we can see that we will get some sort of bounce in the dollar yen. It doesn't need to be anything major, but at least there will be this sideways to higher bounce for the dollar yen after completing this move from the highs for the time being. For the euro, as we expected, we have reached the 111 area, exactly again one more move that we have been saying. Overall, from this area of 102, we expected a move to 109. Then we said there will be a pullback and another move to the upside to 111. Again, spot on analysis way before of time, as we usually like to do. But obviously you guys are not seeing what members see and what we explain to them, because it's very different to have a bias of the market, and it's very different when this bias is tradable and when it's not. But anyway, this is just a clarification. If you are new here and you don't know how it works, we provide to you general paths of the market here on YouTube, but this is nothing compared to details and generally what members are getting. This has nothing to do with what you see here on YouTube. So if you want the full value, this is where you need to be. The link is in the description, so you will know when to avoid trading markets and which directions. So for this pair, we are expecting a sideways to lower rotation to start soon. So at this point, we are no longer looking to stay long in this market. This is buyer's take profit 111, 111.50, the top right here. So we believe that this peak is going to provide soon with consolidation or weakness overall. So we would not really like to trade this type of slow moves. They can play out in many different ways and complex ways. So the easy part, it was the buys, which we have been saying from the beginning of the year. So these moves have already been materialized for us. So we are happy with those moves, and we don't need to be in the market when it's not going to be, there will not be, let's say, good trading conditions, at least for our system. For the pound, exactly at 132, we said that we will see the last move before we get a reaction. This is exactly what has happened again. So we can see from here a pullback phase to start. Once again, the bigger bias was to the upside. We are not interested in the downside. It's going to get choppy. Of course, we might get another bounce higher as we are projecting, but this will not last much. We will get sideways to lower market, which is not going to be very good for traders, because we like to trade the impulses of the market, and this was the move from 122s to 132. So this is the pound transitioning for a pullback. Now for gold, we can see that we have reached the temporary peak, or we might still see one more high, is not out of the question, but we have been looking for this move from the lows at 2,600 to the 3,000 area. So this is more than enough. So many buying opportunities in gold. Now a bounce can happen from here, but it doesn't need to make new highs. We are overall looking for a sideways to lower rotation that can start soon, and there shouldn't be any chases of the market higher. It becomes risky at this point, but we can see from these levels at least a reaction into the next week. But we will not be looking to trade gold from this stage onwards, because soon enough it might be generally sideways to lower. So we do not want to be in the market when we don't have a clear direction and clear setup. So for now we see a bounce and then bounce towards rotation to the downside. So it's not going to be an easy tradable setup anymore, because the buyers are taking profit above the 3,000 area anyway. Now for oil, we have made a video last week and we said it remains weak. There was a reason why we said that. This was like an April Fool's move, fake out of the market before the fall. We expected new lows in oil for a long time. If you are not in our Telegram channel, the public one, join with the link in the description. We have shared from before. Generally, we have shared in our members only webinar, we shared a snapshot of what we shown in that webinar, that we expected oil to break the lows from May 2023, and this is what happened. So generally oil, we can see some consolidation soon, but generally speaking, we are not looking for any major reversal moves to the upside as of now. This might be a sideways to higher move, but we might break down lower again. But in the short term, this might be a consolidation, but we wouldn't be looking to buy oil at this stage of time in general. Now for natural gas, we have been warning also here on YouTube. We said the market is not clear, even though it could have made a move to $5. We already explained from before, is not a high probability either way. The market needs to decide what to do. Members knew from months before the $4, it was a very tough area to break at this point. It's very early. And the market seems to be turning for a double correction from March peak right here. So we can see gas revisiting the $3 area. This is a possible drop that could be unfolding into the next week. So this is the move that we might be looking to see to the $3 area. From here, we might get a stabilization or a reaction from here. Otherwise, it looks bearish for the next week ahead. Now for the S&P 500, which obviously freaked out all the unprepared, uneducated traders of the market last week. So we have explained from these levels for traders to be patient for a couple of weeks. We have seen this move to the downside. Then we have explained we should have a pivot on the 13th of March, which we saw a bounce. So, but for our members, they knew that we didn't like or recommend buying indices for that matter. There is a reason why everything happens in the market, of course, and obviously there is a difference between an analysis, and it's a difference between what you can trade and what you should avoid to trade, right? This is what we will teach you if you are our member. So what's next for the S&P? So we have done overall a double correction lower from this peak right here from February. This bounce also on the 13th of March, if any buyers bought from here, they were protected because this move was enough for a risk-free. And this is a double correction lower that we made from the highs. We are soon going to have a pivot in this area, and we will be looking for a reversal move to the upside. This is going to be a higher probability move that the S&P 500 should be looking to do, and it's still a bullish sequence in the weekly time frame. So if you are not a member, if you don't know what we are talking about, you can join us and we will show you in our live sessions and in our private groups what we see and why we see, of course, with multiple reasonings and explanations like we always do, because we can. So this is the bias for the S&P, soon finding support around this 5,070 to 5,000 area. And we will be looking for a reversal move to the upside to take place, for at least taking off this peak from March. And lastly, for Bitcoin, we are very, very close to finish with this accumulation process that we have been explaining over the last month. So we could start reversing to the upside anytime from the next week. Alternatively, don't be surprised if there is a fake spike to the downside before the market reverses. That's another possibility. But overall, buyers from this area, they should be holding, and the holders, of course, they are holding anyway. We are expecting another move to the upside for Bitcoin. So this is what we have for this weekend's market forecast video. Don't forget to leave us a like so we can reach out to more traders. And once again, if you don't know how to navigate the market and the way that you trade the market, and you have been struggling, which we know that most people are, don't be shy. We can help you out with our membership. The link is in the description. Your investment basically is investing in your own knowledge and your own long-term sustainability if you are really serious about trading or investing in general. So you will learn how to avoid traps and how to avoid doing the wrong things. And we will also release a 6-hour educational video course in which we will come with a one-on-one 1-hour call directly with me. It's a mandatory one after the 6-hour content. So, and this will come also with 6 months additional free membership on our monthly service. So this will be released soon for the public. We have obviously completed that first with our older and existing members. So it will be available soon for new people. Another way that you can join our service is by learning the core basics that not many people can teach you, and also about the industry and many other things that you need to be aware. So this is what we have. Enjoy the rest of your Sunday, and we'll see you in the next video. Take care.